Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
The working capital of P. Young and Sons is 15,500 and current asset is 16,500. What is the total current liabilities? What is the total current liabilities? And to find that, which knowledge can you use? So before we look at
Current
the
asset
response, which
minus
knowledge are
current
you using?
liability.
A.
Current asset minus current
And when
liability.
you say current assets minus current, yes, good. When you say current assets minus current liability, what are we trying to find with that formula? Working capital.
Working capital.
Good.
Capital.
Lovely. So our response, CA minus the 15,500 would give us 1,000. So our response is A. Lovely. And we move on to 32. Number 32. So you're given some information and they're still testing your working capital knowledge. They want you to ascertain what is the working capital of Sharidas Limited. And here we go. What would form our current asset?
Cash.
Prepaid
insurance. Prepaid insurance.
Prepaid insurance, yes, good. And from that, we are going to minus our current liabilities. What are the current liabilities?
Rent owing, creditors, and bank
Good.
overdraft.
Creditors and the bank overdraft. And that give us, what's the working capital? That would be $2,000. Good, 2,000. Lovely. So we're looking at item 33. Item 33 refers to the following information about the operation of a firm. Provision for doubtful debts on January 1st is 700. Receivables on January 1st is 30,000. Receivables on 31st of December is 25,000. The provision for doubtful debt is calculated at a rate of 2% receivable. What amount would be charged for the provision for doubtful debt for the year ended 31st of December? Now, in order for you to calculate your provision for doubtful debt for the year, which formula do you use? What's the formula? So I'm not seeing any information coming up, so I'll just start by writing it, and that would be your total receivables for the year. Or let me just use debtors, same thing, times the rate. And that would give us the provision for doubtful debts for the year. All right? Now, based on this information that we have right here, what figure are we going to use? Are we going to use what we started out with for receivables or what we had ended with?
You're going to use what you ended with.
Lovely. So we're using the value at the end of the year. That is the figure that you'd put in your balance sheet. That is the figure at the end of the year, which is the 25,000. And we're going to times that 25,000 by the 2%. And how much would be the provision for doubtful debt for the year?
$500.
$500. So therefore, good. So therefore, our response is B. Now, before I move on to 34, we're on the matter of calculating provision for doubtful debt. If you were asked what is the amount to be transferred to the profit and loss account for the year, what would be that figure?
It's the 30,000.
You would times it times the 500 by 12.
No. All right, so I'll be annotating again. So you see this information that is right here. This information right here would be important for us. All right? This $700 is very important. Now, the 700 is saying that this is a value that we have in our provisions account at the end of last year, and it becomes the figure that we started this year with. So that would be your old provision for bad debt. So this is your old provision. All right? The 500 that we had calculated, this 500 that we have calculated would be the new provision. Now, when you're doing your income statement, what you put is the expense or the revenue for the year as it relates to your provision for doubtful debt. So what you're going to do is to find the difference. When you're doing your profit and loss account, what you enter is the increase or the decrease. All right, and that's the chat flashing. I'm coming up with the response. The increase or the decrease. How do we know if there's an increase or decrease? You would compare the previous one, which should have been the old one, with the new one. And yes, this year's figure is lesser than the old figure. How much did it decrease by? It decreased by the difference between the 700 and the 500. That would be $200.
$200.
Good. Because there is a decrease, because it's a decrease, it is referred to as revenue. So therefore, let me see in my chat, John, which add the 200 and saying it is a revenue is accurate. All right. And if there was an increase, then it would have been shown as an expense. So again, after finding the total, the provision for doubtful debt for the year, you would compare last year's figure with this year's figure to see if there is an increase or decrease. The difference between the two figures is what you put in your profit and loss account. If it is that this year's figure is greater than last year's figure, it is an expense. So therefore, in your profit and loss account, you show that as additional expenses. If it is that this year's figure is lesser than last year's, meaning the new figure is lesser than the old figure, then of course it is a revenue. And the difference, like in this case, the 200 is shown as a revenue. All right, we're good to go with that?
Yes, Miss.
Lovely. All righty. So I'm like this when I'm working through multiple choice questions. I don't just look at what the question asks for alone. I tend to include your other knowledge, test your other knowledge as well. So here we go. How does an increase in bad debt affect a sole trader's financial statement? Bad debt, what is bad debt? How do you classify it when you're doing your financial statement?
It's a lot. Expense, Miss.
Bad debt is classified as an expense. It is an expense to the business. All right? Because the person is unable to pay for whatever reason. And it is known to you that the debtor is not paying for whatever reason. And you have a lesson there on the YouTube channel that you can go to refresh your memory on bad debt and provision for bad debt. So if it is that bad debt is an expense, what effect would it have on the sole trader's financial statement? Lovely. As Shani is saying, it is going to decrease the net profit. So the response is C. decreases the net profit. Brilliant. Number 35. A company's rent account had an opening debit balance of 2,000. During the year, 6,000 was paid for rent. At the end of the year, there was a closing debit balance of 1,500 in the account. What was the rent expense recorded for the year? Which knowledge are you using? So we can simply do something like this. All right? And we're going to label that our rent account. It said that there is an opening balance of 2,000. Right? So this would be the balance BD. And we can use this, instead of writing balance BD, we could say that it is rent prepaid. Balance BD. And as I said earlier, this could refer to as our prepayment. Why? It is an asset. Once the expense carry the debit balance, it means that there was some amount that was prepaid from the last period, so it becomes an opening debit. All right? Now, during the year, 6,000 was paid. When you pay for an expense, what entry do you make in the expense account?
Credit.
Once you make a payment for the expense,
Credit
it's
entry,
a
miss.
debit. No, it is a debit entry. It is a debit entry because look at it. Paid rent by cash. Which account will be debited? Which one credited?
Cash should be credited.
Cash should
The
be
cash will be
credited.
credited. Lovely, because the money is going out. And the expense, once you pay for the expense, there's an increase in the expense, so therefore you would debit. So the 6,000 is debited to the expense account. And we have one more figure. At the end of the year, there is a closing debit balance, meaning the balance brought down is going to fall on the debit side. But for the balance brought down to be on the debit side, it means that our balance carried down would have to be reflected on the credit side of 1,500. Now, if you look at your account based on the three figures that you're presented with, we have 8,000 on this side and 1,500 on this side. The difference is what we would put to our profit and loss account, and the difference, good, the difference between the 1,500 and the 8,000 give us 6,500.
500.
So the person that was in the chat saying, B, you are accurate. No, we are on the point of looking at the rent account. And you know what knowledge this brings out? Your adjustment knowledge, accruals and prepayment, right? So before I move any further, to highlight the response there for you. Before I go any further, this balance carried down at the end of the period would represent prepaid CD. Prepaid CD, because when you put in your brought down, it will be on the debit side, and that would be an asset for the business. This prepaid, this balance brought down at the beginning would be prepaid brought down. That would be the opening balance, prepaid brought down. That open up your knowledge that you have in terms of accruals and prepayment. If they were on the opposite side, then that would be accruals. Alrighty? So based on calculation, our response is B. Number 36. M. Brown wishes to increase our provision for doubtful debt from 8% to 10%. Accounts receivable at the end of the year total 10,000, whilst the balance in the provision for bad debts account is presently $8,000. Which of the following entries would be correct to record a provision for the year? The knowledge that I tested earlier, saying what would be recorded in the profit and loss account, is the very same thing that they're looking at now. So increasing from 8% to 10%, we need to calculate the provision for doubtful debt for the year. And that would be the 10,000 multiplied by not the 8%, but the 10%, because they are increasing from the 8 to the 10. So the new rate is what they're using, and that would give us $1,000. All right? Following?
Yes, Miss.
No feedback? Oh, good. Now, remember, we look at the old provision and new provision. What is the old provision right here?
That would be the 8%.
The 800 is what is in the account, right? And this one is the new. Comparing last year with this year, increase or decrease?
Increase.
Increase.
All right? And once there's an increase, you would debit your profit and loss because it is an expense, and you credit your provision account. Now, in doing that, you use a difference. Don't forget you're going to use the difference. So the difference between the 1,000 and the 800, because there's an increase, we're going to record that 200 by debiting our profit and loss account and credit our provisions account. And which one is the response? D. Good. So a response there is D. So you have to learn how to analyze the questions, interpret them when you get them. Number 37, the balances of the assets of the Payroll Club as at 30th of June 2019 were as follows. The amount of its accumulated fund was, and some persons may not be used to the term accumulated fund, but accumulated fund is the same thing as capital, right? So if you're presented with assets and you're presented with, so there is no liabilities. So therefore, we're going to add our assets to determine what is the capital. And the amount there is D. That's the response, 9,897. So remember, accumulated fund is the same thing as capital. If there was liabilities, it would have been your assets minus your liabilities. That would give you your accumulated fund. 38, A. Jones, by mistake, debited C. All's account instead of F. All. And of course, this is error. Which of the following corrects the mistake? What type of error is this? We have the same, we have wrong account, same class, so therefore that is error of commission. Excellent. Or are we going to correct this? So C. All account was debited instead of F. All. Getting rid of it out of C. All, we have to credit C. All and debit F. All. So therefore, our response is C. When would we use suspense? When would suspense would have been used?
If it affected the trial balance.
If it affects a trial balance, yes. But how would we know that, looking at this scenario, what could be the case where it would affect the suspense account? Someone is saying when only one account is incorrect. So for example, if it had read A. Jones account was debited by mistake and they did not say anything about F all, it's only C all alone account that is affected. So therefore, you would correct C all by crediting, and you'd have to debit your suspense account. And because it's a reversal, the entry, the value would have to be doubled. Remember, once there is reversal of entries, you flip the entry and you double the amount in order to have the correction. Number 39 and 40 refers to the information on the table below, which is a statement of financial position, again, the balance sheet. And you're asked what sum of money is represented by I. What knowledge are you going to use to respond to this? Which knowledge are you going to use? If this is a balance sheet, and these items you're looking at, what do you classify them as?
Miss, assets, miss.
Assets.
So, miss, we're going to try and find the capital.
Lovely. Not the capital. What you would need to do is determine what would total off the account, the balance sheet. What would be the total for both sides? And
Miss,
this side,
the fact that we have the 5,500, Mr. would add up the bank and the inventory, Miss, and then subtract it. I'm not sure.
All right. So it would be subtracted from the 6,000 because what is on the credit side is all of 6,000. What we have on the debit side is only 4,000. So 4,000 from the 6,000 would give us a difference of 2,000. And this item 2, this 5,500 would represent what?
The capital.
The
Capital,
capital.
miss.
Excellent, excellent, excellent. All right. So we're now at number 41. And looking at this, you know this is your non-trading organization coming out. From this question too, it would test your accruals and prepayments knowledge. So you're asked, how much was collected in subscriptions during the year? So we have number of members. Remember, subscription is a dues that the club members or the members normally pay, right? So that would be an inflow in the business. And for the inflow, it means that it's a revenue account. So subscription is a revenue account. So number of members for the year is 50, number of members 50. Annual subscription is $50 per member. Subscriptions owing at the beginning of the year is $450. Subscriptions owing at the end of the year is $150. And they want to determine how much was collected in subscription during the year. So let's determine that. I'm giving you some time to work it out.
You say you have the 50 times 50. Miss.
Wait, I'm coming over to you. So you do your account already? You drop the account? So I am taking it down because some persons may need the full explanation. So we're doing the subscription account, and we have subscription owing at the beginning of the year. Remember, subscription is a revenue, and revenues owing. How do you classify those when you're doing your balance sheet? Revenue owing. Asset or liability?
Liability.
Liability.
Revenues owing. Revenues owing. The
Asset.
expenses owing is liability, but the revenues owing is an asset. And at the beginning of the year, if we have revenue owing, it means that we would have accrued BD of the amount is 450. All right. And we have the amount owing at the end of the year. For the amount owing at the end of the year, we would have to put the CD on the credit side, because once it is revenue owing, it is a debit balance. So accrued CD on the credit, and that amount would be the 150, right? Now, normally in your account as well, you show what we're trying to find out is the bank value, or we can say bank or cash, the amount that was collected for the year. So the annual subscription would represent what we put in our income statement. And that would be the 50 times the 50, the 50 members times the $50 that they pay. How much you got?
2,500.
2,500. All right. So based on what we have now, we have all of 2,950 on the debit, and we have only 150 on the credit. And that would give us the amount that is collected for the year. What is it?
2,800.
2,800. Did anyone got that correct? Let me see the chart.
It's from before the question start, me tell you, see.
You did? All right, good. But then I wanted to take it down for the individuals that would need the explanation. That is why I didn't rush into it in saying, yes, that is the answer. All right? Lovely. Lovely. Are you the one that you feel like you're ready for the exam?
No, miss, not at all.
You're not yet ready? I believe you're ready. All righty. So we're now at number 42. Mr. Miguel's capital on January 1st was 40,000, and on December 31st, 85,000. He withdrew 1,000 in inventory during the year. What is profit for the year? And I will be annotating because I want to ensure that everyone is following. So we have this simple equation. We have capital, and this is the balance sheet section that you're doing. The finance by capital plus net profit minus drawing, and that gives us what is called closing capital. Should I put opening capital there for you? Or old capital? So the capital at the beginning would be our opening capital. And if it is that they have introduced additional capital during the year, you would have added that as well. So we have this information right here. We are presented with 4,000, which represent the old capital. So we're going to put 4,000 right there. We have capital at the end, and that would have been the 85,000.
This one is
This was
40,000.
40,000. Just realized, thanks. Put on that additional 0 right there. That's 40,000. And we have drawings of 1,000. So we need to solve to find the unknown. So that would be 85,000. And we have a total of, not total, but 40,000 minus 1,000 give us 39,000, right? So therefore we need to solve to find out what is the net profit. What you got? Applying your math skills right there. So we have 39 on this side, and if we take it over, once it crosses the equal, we're going to change the sign from positive to negative. 85 minus 39 leave us with 46,000. Lovely. So response there is B. Questions like these tend to come on exam. For you to find net profit, for you to find what was the drawing for the year. So questions like these are usually on exam. Number 43, WX and Y. WX, Y, and Z are partners sharing profits and losses in proportion to their capital. The capital of each partner is shown below. What would be Z's share of profit of 72,000? So remember, when you're to calculate, when you're to use your share in profit and losses based on the capital contributed, remember, it is the partner's capital divided by, so we're trying to find out the profit sharing ratio right there, divided by total capital and the result that you get, you're going to multiply that by the share of profit. So we're trying to find for Z, total capital is, pardon? I come in, let me take my time and work it out for the individual. So in calculating, Z's capital is 300. We're going to divide that by total capital. So we have 3 plus 2 plus 1, that is 6 plus 3, that is 900. And if you should simplify that, you would get 1/3. And we're trying to find 1/3 of 7,200.
2400.
And that gives us 2,400.
Both are be bright people in us.
Including you. You're in that category too.
No,
Which of the following accounts shows how you are? Which of the following accounts shows how profits and losses are shared among partners? Which account show how you share the profits and losses for the partners?
Appropriation.
Yes, appropriation.
Good. Appropriation. Excellent. Excellent.
Shani's iPhone said B before you even done the question.
All right. So number 45. Mr. Smith does not keep proper records. He began his business with 10,000 in the bank. He uses his vehicle and building worth 6,000 and 15,000 respectively as part of his business. Customers owe him 4,000. He withdrew 1,500 for personal use and owed suppliers 2,000. What is the closing capital of the business? So we need to work out that. When the questions are that long, don't be afraid to write up on the paper. Okay? So what we're going to use to find the closing capital would be remember, as simple as it is, asset minus liabilities give you capital. All right? So there was 10,000 that came into the business that was in the bank, and the 6,000 and the 15,000 worth of assets again. That is all of 21,000. And there's a customer that is owing 4,000. Again, that is asset. The amount that was withdrawn will decrease what is in the business here, minus that 1,500, and the amount owed to the suppliers of 2,000 must be subtracted as well. So therefore, our response for the persons that have C
21.50.
not 21, 31.
31.
31. So the response there is C. Which of the following features is associated with private limited companies? Private limited companies, they are fully owned, they're family owned, shares are not sold publicly. Financial statements are published, government agencies purchase shares. Which one? The
Miss
best
B?
response. B,
The
shares are
shares
not
sold publicly.
sold publicly. Lovely. Lovely. Sure, Shanice. That's a yes to your response, Shanice. So we're doing number 47 now. Capital at the start of the trading period was 20,000. At the end of the period, it was 22,500. The net profit for the period was 6,500. How much money was withdrawn for the period? Remember earlier I told you that this question is usually on the exam, right? So
B.
Miss $4,000.
hold on. Sorry, there was some interference there, so I had to So what knowledge are you using right here again?
Common
Knowledge
sense.
is used. Come on, man. Which of your common sense knowledge are you using? How did you ascertain the value? The equation that we did earlier, which is the opening capital gooden. Opening capital, add net profit, less the drawing, that would give you the closing capital. All right. So the 20,000, add the 6,500. We have that on the left hand side, the 22,500 on the right. We cross over, or the difference would give us 4,000. That's what you got?
Yes, Miss.
Good. According to the Partnership Act, if there is no deed, no partnership deed, no agreement, the amount of profit to be received by each partner would be in equal share.
Equal share.
5% of net profit. All right. Equal share. there's a case where you use the proportion to capital invested. If there was a deed, but they did not say all the profits or losses should be shared, you would use in proportion to capital invested. All right. Number 49, we're looking at what is the ending inventory at the end of January. If they started out with this, so basically the knowledge that you can use, because I'm seeing inventory at start, purchases during the year, and we have cost of goods sold. Which knowledge can we use right there? Which knowledge? Don't tell me the response alone. Come on. There are some persons you're waiting to find out. Yes, you're trading knowledge in ascertaining your cost of goods sold. So COGS is equal to your opening stock.
Is as well opening.
Opening stock, add purchases minus closing stock. All right? That is the knowledge that you're using to ascertain the response for this. So here we go. We have the cost of goods sold. Let me change the color. The cost of goods sold is 1,400. We have opening stock of 1,500. And we have purchases of 1,200. What is missing is our closing stock. So our result would be what is our result? D, and that is 1,300. Lovely. The 2,700, which is on the right side, minus the 1,400 give us 1,300. You have to learn to know which knowledge you are to pick up while you're responding to the questions. Number 50, which of the following items is not recorded in the appropriation account of a partnership? And that is drawings. Where do we put the drawings? Where do we put the drawings?
And
the current account. Lovely, in the current account. All right, when a company declares a dividend of 15%, the dividend warrant of a shareholder owing $1,500 $1 ordinary shares would be, so what they want to find out is how much dividend the individual would get if they have $1,500 $1 shares. What would be the response?
$225.
$225. And how did you get that?
I find the 10%, the 15% of the 1,500.
Of the 1,500. So the person has 1,500 shares and you're giving them a dividend for the number of shares that they have. It will be the percentage of the number of shares. Brilliant. Now, number 52, and it seems to be long, but all you have to do is just read the question and comb through it thoroughly to find your response. Analyze it carefully.
What letter was the answer again? What was the letter?
B.
B. All right, thanks.
Good. Number 52, item refers to the information right here. And from you look at it, you know it's partnership. And they're asking how much money should Jane receive as her share of residual profit. The profit sharing ratio is 3:2. And we're seeing that net profit is $23,500. Interest on capital is, for each partner is presented. And we have salary, we have drawings, and we have interest on drawings. Which information would be useful in getting the value for the residual profit, the share of profit? We're not looking at what Jane should get yet. But the first that we need to do is to find out what is the profit that is remaining after appropriating. So remember, it is net profit. Net profit, you add interest on drawing. Add interest on drawing, less salary, less interest on capital. All right. So what the business receive from the partners, that would increase the amount of profit in the business. From that, because you have to pay out the salary to the partner, you have to pay out interest on capital, you subtract that. And that would give you the profit that is remaining in the business. So let's go ahead and do our calculation quickly. The net profit is 23,500. Interest on capital would decrease it. So we're going to minus the total interest on capital, which is 3,000. We're going to minus salary as well, because salary is paid out by the business and Jane is getting salary of 2,500. So we're subtracting that. Drawings, we don't use that in our appropriation account. So the drawings presented right here is a distractor for you. And we're going to add the interest on drawings of $60. So it therefore means that there is the residual profit is 18,060. If Jane is to get 3/5, so it is 3 divided by the total number in the ratio to get the numerator. So that is 3/5 of the 18,060. It means that Jane is going to get a value of 10,836 as her share of residual profit. All right. That would be B for the response. Number 53, and this is payroll. P. Amos is employed by a construction company at a rate of $7 per hour. That is the basic pay per hour. During the year, during the week of the 6th of April, he worked his basic week of 40 hours. The income tax due on his pay is $20, and he is also liable to pay Social Security contributions of 5% of his gross pay. What is the net pay? The first thing we have to ascertain what is the gross pay, and the gross pay there would be, because there's no overtime, it's just the 40 hours times the rate of $7 per hour, and that would give us 280.
Yes, miss.
And that is gross pay. And from that gross pay, we have the income tax that is already calculated, but we need to calculate the Social Security. And the Social Security would be the 5% times the 280, and that gives us
$14.
All right. And this 14 represent the social, let me just put SS, Social Security. And this is a deduction. So what we're doing to get the net pay, based on this question, it is the gross pay minus the total deduction, which would have been the SS and the income tax. So 280 minus $14 minus $20 give us a net pay of, what is it?
$246.
$246. Lovely. And of course, persons had the response already in the chat, but again, we are trying to ensure that everyone benefits from the session. All right, number 54. What is the maximum capital a company can raise from selling shares to the public? All right, what is, I see the chat flashing. I need to open up back my chat. All
C.
right, so the response there is C. Lovely. What does issued capital represent? And we need that information for 55. Issued capital. All right, so this is information presented. If the issue was fully subscribed, how much capital did the company raise? So issued capital is the actual value of shares that were sold. And the company has ordinary of 200 units at $2. So 200,000 times $2 give us 400,000. And they have 5% preference shares, 10,000 units times the par value of $5, and that would give us 50,000. So in total, that would give us 450,000. So your total ordinary share capital plus your total preference share capital would give you the total value of capital that the business would generate if all the shares are sold. When it says fully subscribed, if the issue was fully subscribed, meaning if they have sold everything, how much money they would have generated. Now, before I go any further, we say 5% preference share. What does this 5% represent? What's the meaning of the 5% attached to the preference right here? The 5% represents, I see Tanika has it there in the chat, I see Smith with it. The 5% represent the value, the rate to be paid out as dividend to the preference shareholders. So the question I'd ask you, what is the preference, the dividends to be paid, the dividend to be paid out to the preference shareholder? What would be the value if you're paying out this 5% to the preference shareholders as dividend? $2,500. Excellent. So that would be the 5% of the 50,000 that was generated in share capital. The new date for the exam, the new date, let me double check on that for you, Alia.
5th of July.
It's the
The
5th of July,
right? Sure. Yes, so that is correct, Alia. Good. Thanks, people. Which of the following will result when opening inventories of raw materials are added to net purchases of raw materials? What would you get? D, raw material available for sale. All right, or would you get your raw material used? If we do what, then we'll get to the raw material used. What would give us raw material used? It's the same thing that is referred to as raw material consumed. So once you subtract your closing stock of raw material from your raw materials available for use, then you would get what is referred to as raw material consumed. Okay? The response for 54 was C. To get cost of raw material used, or they refer to it as cost of raw material consumed, it is your raw material available for use minus your closing stock of raw material. All right? And you know your prime cost is when you add your direct cost to the raw material consumed, or your total of your direct give you your prime cost. And your production cost is when you add in your factory overhead add your opening work in progress if there is any, less your closing work in progress if there is any, you would get your production cost of goods completed for the period. We're now at number 57, and 57 is also a payroll question. And the question asks the total income tax to be deducted from Tarisha Ali is. So it is monthly salary is 3,500, overtime is 800. So income tax rate is 25% on every dollar above 2,000 monthly salary. So what they're saying, anything above 2,000, they'll pay salary on that. Say monthly salary is 3,500 and the overtime is 8,000. It means that the gross is gross pay is the 3,500 plus the 800, which would give us 4,300, right? No, anything above the 2,000 is what they would pay the income tax on. So the taxable, that would give us our taxable pay. So taxable pay is equal to the gross pay minus the allowance, the income tax allowance, or the non-taxable pay. Non-taxable pay. All right. So based on this question now, the taxable pay would be the 4,300 minus the 2,000 non-taxable, and that would give us 2,300. Now to get the income tax, it would be the 25% of the 2,300 and that gives us
575.
My bad right here. I did something wrong. Sorry.
Miss, isn't the taxable pay only the monthly salary? Because it said $2,000 of monthly salary and not the gross pay itself.
All right. This is not the response. Guess what? They said that 2,000 of monthly salary, anything above the 2,000 of monthly salary is taxable. The monthly salary is 3,500. It means that it is 3,500 minus 2,000 would give us the gross salary taxable pay, which is 1,500. So we define 25% of this 1,500 times 25%. So 1,500 times 0.25 is 375.
Yeah.
And now 30% of overtime is taxable as well. So 30% of this 800. This is why we have to read the question carefully. And this question always come like this. How they arrange it, the formatting of the question is usually a distractor there. So you have to read the question carefully. All right, 30% of the 800 give us 240. So 240 plus the 375 give us the response, and that is 650. So this is a typical thing that will take place if you don't analyze the question carefully. Because what I did, I just look right here and stop there. And so that is the figure that we're going to use. All right, so the response there is 615. And now we're at number 58. So the following item is not considered a source document for payroll. What is not considered a source document for payroll? We need the clock card so we can know the time that the person works. We need the attendance register to say the person actually come to work so we can pay them. We need the electronic time card. What we don't need is a medical certificate. Yes. And we have 2 more questions remaining. Number 59. What is the balance per bank statement? You know, this is bank reconciliation statement, right? And if we're presented with the balance as per cash book, remember it is the balance as per cash book plus your unpresented check, that is 560, plus the 120 as unpresented check. We less our late lodgement, which is the 150, and that would give us a balance as per bank statement of 530. Good. And the final one, the net profit of a firm was shown as 1,600. It was later discovered that discount received were undercast by $10. When the revenue is undercast, it means that you need to ensure that you add back the value because that should increase the profit. And purchases were understated. If purchases is undercast, it is going to increase the profit. So if it is undercast and we're correcting the profit, we need to minus to get the correct thing. That is 1,600. We're going to add that 10 and minus the 36, and that will give us A as 1,574. All right. So that's it.
60, please.
Pardon?
Can you repeat already 60?
All right. So because the purchases is understated, it means that it is going to result in a higher profit. And to correct it, what you'll have to do, because it gave you an higher profit, you have to remove back that extra profit that was calculated. So when it is increased the profit, to correct it, you have to minus. If it decreases the profit, to correct it, you have to add. So like the revenue that was undercast actually decreased the profit. So therefore, to correct it, you have to add back that 10. This 36 that overstated the profit, to get rid of it, you have to minus it. That is why the response is 1,574.
Like, share, and don't forget to subscribe.